Welcome to the Fiscal Physical Podcast. Join us each week as we sit down with the founder of Alchemy Wealth Management and author of Your Fiscal Physical, Ryan Nelson. Tune in to gain valuable insights and practical tips as we simplify complex financial concepts into digestible lessons. From budgeting to retirement planning, this podcast is your go-to resource for mastering financial literacy.
Welcome, everybody, to this week's episode of the Fiscal Physical Podcast. My name is Aaron. I am here with the founder of Alchemy Wealth Management, the published author himself. Find his book on Amazon, Fiscal Physical, 7 Keys to Becoming Financially Fit, or Your Fiscal Physical. And Ryan Nelson, how are you, my man?
Doing well. How about yourself, Aaron Hoisington?
I'm doing well. Thank you so much. Appreciate everybody tuning in for this week's episode. As I mentioned, I've mentioned on previous episodes, these drop every week. We'd love to have your support. If you guys have any questions, please email us at podcast@alchemywealth.com with any feedback, topics, anything you want to discuss. And this week, Ryan, we are going to dive into the scorecard of a company. This topic is one I'm curious to pose to you. I've been really interested to get your feedback on it. I subscribe. I don't actually know how I got signed up for this, but I subscribe to a weekly or a daily email through Yahoo, and it talks about like the state of the market and all these different things. And sometimes if I'm feeling froggy, I'll like pop in and I'll check out like what's going on. And one of the things it always talks about is like who's reporting that day. It like mentions like, oh, Home Depot's reporting this day, or this company like reported and they missed their earnings or something along those lines. Like Netflix is coming up next week and talks about if they hit or didn't hit certain goals. But I'm curious what that actually all means. Like how often people or companies have to report, what that financial reporting entails, and like, is it important or not, like in your eyes? So I'm curious to just a breakdown for the general public there about, because I'm sure everybody's heard of like reporting or earnings and such too. So, but what does that actually mean?
Yeah, so when companies go through their quarterly reporting, basically they are releasing their financial results for the last quarter. Oftentimes they'll hop on like a big public conference call, and they'll have somebody on their team releasing these numbers to the public. So it's the first sort of view the public has of these numbers. And now a lot of companies will sort of do like dog and pony show? What's the term?
Yeah, that's a term.
Yeah. And so they'll kind of, make a big presentation out of this.
It's a fun thing, yeah.
And it's sort of turned into more like a sales pitch, I think, in my personal opinion, in some ways, where they are communicating. They're telling a story to the public. So it might be, hey, this number's down, this number's up, this is what we see happening in the future. And they're trying to figure out a way to present it in such a way that spins their company in the best light. And so there's a lot of sort of fanfare, so to speak, with some of these. And some of them are known for being more like flashy, if you will. But nonetheless, like quarterly reporting is that time where companies report their financials kind of to the public. So it is a scorecard. The numbers that people are kind of usually paying attention to or watching are what's the company's revenue, what's the company's earnings, what's the company's profit margins, and what's the guidance of the company. So revenue is just the total sales. So basically how much money the company brought in before expenses, before anything like that, just how much total money did the company make. Then earnings are what's sort of left over after the expenses, interest, taxes, and other stuff like that is paid. So revenue is sort of all the money that came in. Earnings are like what's left after the expenses. Profit margins can help tell us a story about how like efficient that company is running. So how profitable they are as a percentage. And then guidance is just basically the management telling the investors, so the management of the company telling the investors what they expect going forward. If they're selling AI chips, are they projecting to sell more AI chips next quarter or less AI chips next quarter, right? If they're selling, if they're fast food joint, do they see some of these weight loss drugs negatively affecting their business and they expect to sell less hamburgers next month? Or are they expanding more locations and expect to double how many hamburgers they sell next month? So that's really just the guidance, what management's telling the investors they expect moving forward. And that's oftentimes just as powerful as the revenue, earnings, and profit margin numbers. So that's kind of what the numbers are and what the guidance means.
Good question for you. Is this required of like all publicly traded companies? Is that how okay, it's just public. Private companies don't have to report right to the public there.
Yeah, so privately, like Alchemy would be a privately held company would just be a company that's not publicly traded. Once you go public, then you have to start doing this reporting. There's sort of mixed opinions on this reporting. Some of the company, so it creates transparency. So us as investors, we can now see some more details into these companies, so we know what we're investing in. However, some of these companies say that it's a huge administrative burden. And so they're like, hey, not much is changing from quarter one to quarter two. You're making me go through all this, like reporting all these compliance hoops. And it's just a waste of resources. And so there's been talks about maybe reporting on a least frequent basis or something like that. So who knows, that we could experience something like that in the future. But the intent of this is around transparency and allowing investors to sort of see behind the curtain and kind of get transparency into the companies they're investing in.
Sure. That makes sense. Yeah. And you mentioned like the dog and pony show, which is kind of funny. I remember when I first kind of started getting into like, I was investing a little bit on my own or buying stocks. Like I got like an invite to like the I think it was Caesars, I want to say.
Okay.
Like I own some stock. I can't remember if it's that, but I got invited to their like the quarterly meeting, and it was like during like the summer of like 2020.
Okay.
And like, it was a Zoom call or like a big conference call, and like nobody knew how to use the technology.
Oh, really?
And it was just like every time they'd go to like somebody else who would talk, like they'd be like, "You're muted. You're muted."
Oh, that's
like,
funny.
I'll never forget. I was like, "Wow, this is not very good." Like what's going on here? But I have been on. I've seen other ones too, like where they have like celebration and music and all these different things, and it's like an unveiling of like the earnings kind of thing. You're like,
some companies are trying to make it flashier and flashier.
Yeah.
And then there's other ones that are just incredibly boring. It's just like
here they are.
Yeah, it's just like the CFO, nobody else on it, just like rallying off numbers. So yeah, different companies definitely handle it differently.
Yeah, it's kind of funny to think about. Yeah.
But yeah, so then, like we said, the companies give this guidance on what they expect to happen, right? And then sort of based on that and based on what the public opinion is, the public starts to sort of guess what the revenue and profit margins and earnings are going to be for the next quarter, and then the company releases their new numbers, and so you might see that company have like good increase their revenue, increase their profit margins, increase their earnings, and their stock still drops because maybe they didn't increase it as much as the public thought they were going to increase it, right? So there's always the sort of expectations, and you'll hear a lot of times people be talking about if they beat expectations or missed expectations. So oftentimes when you hear companies beating expectations, you might see their stock pop up a little bit that day, and if they miss expectations, you might see their stock fall a little bit that day, which is kind of interesting. The other thing, another thing that's a little interesting is if you think about this. So if you take company ABC, right, just a made up company, and we have a certain amount of information about their revenue, all that stuff today, they released their quarterly report today. So we're not going to get a new quarterly report for another 12 months, or another 3 months, another quarter. What's interesting is there's some information that comes out along the way, but largely you don't have a lot of different information between, day one and 3 months from now. So it's kind of interesting if you think about like day trading or somebody who's making trades like not only multiple times a quarter, but maybe multiple times a week or multiple times a day or multiple times an hour or multiple times, in a minute. What's interesting is there's not a ton of new information coming out on a consistent basis throughout those quarters. And a lot of the information that people are acting on is speculative, or just something that they they think is going to happen.
Right. Yeah.
So it kind of something interesting to think. So this is sort of really the holy grail when it comes to information from the company. So
yeah, no, it's interesting to think about I guess the perception of it, of how it's like that. It's really, really like cool. Like we hit all our goals or whatever, but maybe we were the investors or the public was expecting us to crush this. We've heard all these awesome things about this, and you're like, oh, that's all we're getting. Like, it's kind of funny to see the correlation between I guess perception and then what's actually I guess put forth in these kind of meetings
for sure
too. So
yeah, and then even you got to pay attention because let's say let's say a company has to lay off a bunch of people, right. So now the company, it doesn't make a lot of sense to go just communicate to the public and say, hey, yeah, we're doing terrible. We're losing revenue at a faster rate than we ever thought was possible. And so we had to fire all these people, right? That'd be a terrible presentation. So instead they try to spin it as, we're becoming more efficient. We're using AI to right size our business, which allows us to lay off these people, which makes us more profitable. Right. And so then the hard part is they're forced to report these numbers in a certain way, which is awesome and gives you transparency. But then also when you start listening to them, and again, they're presenting basically then a story to the public, it's like, well, okay, yeah. So is letting people go a good thing or a bad thing?
Right. Yeah.
So their expenses went down. Maybe their profit margin went up a little bit. Are they positioning what? Yeah, it's just, you can start to see how some of these numbers aren't necessarily super objectively just good or bad. They just are what they are. And it takes, I'd say take everything that the company's presenting to you with a grain of salt. It takes probably an element of just objective reasoning to come to some conclusions on your own, and don't just blindly trust or follow sort of the stories that are being presented to you.
Sure. And I guess too, it kind of goes into what you were saying, hey, in kind of your mantra, your motto, stay the course. If you believe in a company and it's hey, we've mentioned Apple computers quite a bit on this podcast in the past, or if you're hey, one bad quarter of Apple, probably doesn't mean I'm going to just jump out of owning a bunch of Apple stock. It's hey, this is historically done pretty well. Or these different other companies where you're do I, you had one bad quarter, maybe you had two bad quarters, kind of like the stock market, what you're mentioning, you've mentioned previously, hey, cool, you might have some dips and such too, but generally over the course, you can look at the history, I guess, more is better than oh no, the first quarter earnings weren't where we wanted them to be. Let's pull out everything out of this versus hey, let's see what the pattern is with this here too. So
yeah. I was listening to a podcast earlier today, and it was a gentleman talking about sort of his sort of life arc, if you will. And he's if you zoom out super far, he's it just looks like slow, steady improvement throughout my life. I released an ebook. People liked it. I published an actual book. It became a bestseller. I started $1 million, business. He's when you zoom out, it's just this linear growth of improvement throughout my life. But then when you zoom in and you start looking at it, it's at our business, we've released multiple courses that have failed miserably and been a loss of money, right? So as you start zooming out, you can see the stock market, it goes up and to the right? It looks slow and steady, but then when you start zooming in, you can see a lot of ups and downs, right? A lot of kind of failures along the way. And so exactly right, the same thing. The best companies in the world have had single quarterly reports that maybe weren't as great as they would have liked. So absolutely, I would not put a ton of weight on any one single report. It's good information, and it's good information to have. But yeah, for a long-term investor, you're really thinking about, I'm investing in this company for the next 20 years.
Exactly.
If they had to let go of some employees last quarter, that may be great. They may be doing the best thing to help position themselves for a 20-year growth, right? So yeah, you just want to, I think, take all this stuff with a grain of salt. One of my kind of pet peeves is from an economic news cycle standpoint. Sure. These are basically always coming out. So if your job is to if you are in the media, the financial media, man, this stuff is like a gold mine. It's always coming out, right? And it sounds really important, and it gets a lot of hype. And so it's just this like never ending flywheel of new information that they can like be pushing out to us.
Yeah.
But it's probably just not that important. So it is important stuff, but as a retail investor, probably most people don't need to be ever logging onto one of these calls or looking at individual reports, and zooming out and taking that longer term approach is much more rational than putting too much weight or getting stressed out about like one company's reports. And if you're diversified and you own, hundreds of different stocks, it's like, some of your companies are going to do really well. Some are not going to do so well. And that, and that's completely reasonable and expected and not out of the ordinary and not stressful at all.
Yeah, no, that's a great breakdown on that for sure, Ryan. So awesome. That's great. It's kind of like, hey, like it's important, but don't put all your eggs in that kind of basket piece of it.
Yeah.
Of like, hey, you shouldn't lose sleep over a quarter of earnings, like for the most part there. So awesome, man. Anything else to say on this here before we wrap up?
No, that'll do it.
Awesome. I appreciate it, man. And we'll be back on the other side of this. Everybody hang tight.
And now, to put the personal in personal finance.
Welcome back, everybody, to this side of the Fiscal Physical podcast. Appreciate you guys hanging with us here. Still here with Mr. Ryan Nelson. And Ryan, I got a question for you. You ready, man?
Let's do it.
All right. So I can't for the life of me remember if we've done this or we've talked about this question before. I think we have, but I'm just going to bring it back and throw it out to the listeners. So if you're new out there, hopefully this isn't a repeat. But you've been to quite a few several countries throughout the world, visited, explored, eaten at different places. And I'm curious, like, what is a country that you are wanting to visit next? Like, what's on your bucket list, or I guess you're next in line to go and visit?
I think, I don't know if these are next in line, but a couple of countries that jump out at me is I think Greece looks beautiful. I really want to go to Greece and see. Yeah, I just think it looks like a beautiful country. Japan is like looks super cool and like crazy. Like from a cultural standpoint, like it just sounds like they do a lot of things really efficiently, and it's supposed to be a beautifully clean country, great food. So Greece and Japan are probably among the top two. Australia sounds like a ton of fun. Sure. Brutal to get to, but a ton of fun. So I guess let's call those the top three. So Greece, Japan, and Australia. What about you?
Okay, yeah, that's good. We have one that overlaps. I really want to check out Japan.
Yeah,
I was talking with some of my buddies recently, and they're like, yeah, like nobody had anything bad to say about it.
And I've
had a couple friends who like visited it too, and they said it's awesome. Food's amazing. They did mention the efficiency too of like you can get on a bullet train and like get across the country, like, and it's like everything's relatively affordable. And so I was like, oh, that'd be awesome. And then the other one is I'd like to go somewhere and like to see like the Northern Lights.
I'd love that.
I think that'd be super cool. Whether it be like Iceland or Sweden or something like that. But it's also a lot of those places. It's really cold.
Oh yeah,
and so like I'm like, I don't know, like maybe maybe I should pick somewhere more tropical. Right. But I think those would be the next two things I'd want to go. I'd want to go to Japan. And I'd want to go to somewhere where I could see the Northern Lights. I've seen like different places where you can rent like or stay in like a cabin, and it has like a glass ceiling, and you can like watch the Northern Lights or whatever. I was like, that'd be so cool, like to be able to see. So something like that. So, but yeah, I'm curious, listeners, let us know, where do you guys want to go next? What's on your travel agenda? Where you guys want to check out and why? Let us know. We'd love to hear. You can email us at podcast@alchemywealth.com. Send us a text. Send us a letter. However you guys want to get that communication to us, we'd love to hear it. And with that, Ryan, I think we'll go ahead and wrap up. But I'll turn it over to you.
As always, stay the course.
Thank you for joining us for the Fiscal Physical Podcast. Until next time, happy listening. And as always, stay the course. If you have a question or topic suggestions, please email us at podcast@alchemywealth.com. If you enjoyed today's discussion, subscribe to the podcast to ensure you never miss an episode. And consider leaving us a rating and review on your favorite platform. This helps other listeners like you find the show. For more resources, you can visit Alchemy Wealth Management's website at www.alchemywealth.com or find your Fiscal Physical, the book, on Amazon. We'd be remiss if we didn't mention that personal finance is just that, personal. Please don't take anything we say as advice. The preceding content is for informational and entertainment purposes only. It's not an offer or a solicitation, nor should it be construed or relied upon for tax, legal, or investment advice. It doesn't consider your personal financial situation or objectives and may not be suitable for you.